Hey guys, welcome back. So this is the market review slash pre-weekly forecast for the week that ended on June 24th. So in case you're watching this video later on in the nearest future. Alright, so this is the price action for the whole week, starting from the new week opening gap. So we have the new week opening gap here. Price opened and closed here on Friday. As outlined, you can see that it's a bearish week. We ended bearish, but there's something very important I want to talk about that happened in this week. That might be some people will be very confusing. It will be very confusing for them because everybody was expecting sell. So everybody was expecting buy on Tuesday, and everybody was expecting sell on Friday. So it was just confusing when I was seeing a lot of discussions on the Telegram channel. Okay, so I'll be talking about this particular thing. Okay, first we have the new week opening gap, which price retested but did not break through. This is something that happens very rarely because most times you expect what the new week opening gap to be broken, then break again. Like how it's always happened other weeks, and finally retest before trading downwards. This is why I say that market conditions differ. Now this is the end of quarter 2, right? This is the last Saturday on in quarter 2. As you're heading to quarter 3, gird your loins because you might see the same thing I've been teaching. Yes, the same strategy, the same concepts, the same models, but in different market conditions. That's why as a trader you need to be flexible. You need to be adaptable to all of these market conditions. And trading multiple pairs will, like, you will not be on track. Trading one pair or two pairs will likely tell you, or you make you understand what that pair does. You study the quarter 2 of last year and see what, and try to compare it to the similar to what this quarter is going to be doing. As you're heading to quarter 3, you go to last year quarter 3 and study what price have been doing. That's back testing, and try to find something similar with what price will be doing this quarter 3. That's how you stand out. But when you're trading 30, 20 pairs, trust me, you'll be off track. All right. So we had Monday. Monday was bank holiday. There was um nothing to trade on Monday because of it was bank holiday. And on NASDAQ, if you might have noticed by now, on NASDAQ during bank holiday on Mondays, or let me say any bank holiday on NASDAQ, it could be Monday, it could be any day. There is a time that price stops. I think that should be around 12:55, something like that, 12:55. Go back to all the bank holidays on NASDAQ. I don't mean Euro USD or GBP or whatever. Go back to all the bank holidays on NASDAQ, 12:55 p.m. During that lunchtime, price stops for some time. I think so, yes. Then opens 6 p.m. That's I've seen about 4 times now. So you can don't take my word for it. You can go and check them by yourself. And we had a lot of buy side and sell side liquidity here. We had 2 years, but it was three normally, but the other two was relatively equal. So that is social liquidity. The one I was pointing your attention towards, the price did not take that out before we start buying on Thursday. What happened? Stick to this video if you want to know why and how I took up to 17 reward ratio trade on Tuesday and Wednesday. But I do not share this particular treat. I mostly don't share my treats. Most times I share one treat in a week. Most times I don't share at all because that's just me, I suppose. All right, let's go to the next price action. All right, Monday and Tuesday. This is our opening gap on Sunday. That's Friday's price action and Sunday price action beginning. Friday close, Sunday open, and we traded the consolidating the Monday bank holiday. We just went one side, and if you check the time frame, or you can go to your chart and check it very well. Exactly 12:55 p.m. somewhere around here, price stopped moving. Then 6 p.m. price opened again and closed here. So Tuesday was the main trading day, and I think we had high impact news on Tuesday. I'm not really sure. You can go and check again. You can check your Forex factory calendar. we retested on the NWG. If you check your 5 minute time frame, this is 15-minute time frame. If you check your 5 minute time frame, you can see that the candles are respecting that NWG respectfully. Now, there's something I want you to know. When trading with fair value gaps or voids or new week opening gaps, I've never mentioned this before. I wanted to mention it sometime in the future, but let me just mention it now. If price is trading into a fair value gap or a new day opening gap or a new week opening gap, and you see price do this thing, it's not breaking, that new week opening gap with candles. Looking at the 5 minute time frame, the bodies of the candles are respecting that in new week opening gap. Be rest assured that price is going to respect that level. I'm going to show you more examples, of course. Now, what happened? What did I do on Monday? This is what I did. I did not trade anything on Monday. There was no setup for me. I know many people caught this particular buy, this green candle here in the middle. That's 9:30 green candle where price traded into that new week opening gap before retesting. Many people caught it there using the intraday AMD. Yeah, I'm very sure using this light fair value gap there. Many people caught that. Because there are some people missed trades because they were not given confirmation. But after this break of low, price retesting on NWG, break of low. This is a perfect simple entry model. That's a perfect simple entry module setup. You can see that price trades high, sweeping all of this high. For some traders, this is a trend line, this trend line liquidity or whatever I want to call it. But I'm seeing price retesting on a new week opening gap. Not trend line liquidity, but new week opening gap. That new week opening gap is what is telling me that price will reject from that place. Now, I wait for my confirmation. On the 1 minute, on the 5 minute time frame, on the 15 minute time frame, all the confirmation was synced together. Why do I say? Because if you waited for a 1 minute confirmation there, the last low that was broken was here. So this is a 1 minute confirmation. This is a 2 minute confirmation. This is also 3, 4, 5 minute to 15 minute confirmation. OT sweeping this high, sweeping this low. We take our premium, we take our discount, and at this point, many people think we are going to buy. We are going to start buying further. Yes, I know some people were already picking sales. I'm sorry, already picking buys here from last week Thursday's fair value gap to buy further to take out this high, but that did not do that. Looking at the premium and the discount, because you are selling, you want price to trade into the premium. Pick a draw on liquidity. Remember what I taught you on confirmations, OT. You find out your premium and your discount. You go to the 1 minute time frame and find the draw on liquidity in the premium if you are selling, or in the discount if you are buying. Then that there is your entry. So what did I do? I went straight to the 1 minute time frame, and the extreme fair value gap is where my entry was. I did not wanted to hold the trade for long. I just placed my stop loss, my take profit here. But price consolidated, and at the end of the price just closed in small profit, but I did not close that trade because I was so confident that price was going to take this high. I'm sorry, it was going to take this low. Why? We retested. See the 1 minute time frame. The 1 minute time frame is not respecting the NWG with the candles and everything. But if you check your 5 minute time frame, you shall see it. Price trades into that 1 minute draw on liquidity, and that was my entry. This was about 8 risks to reward ratio, I think. Yeah, but I did not take profit on that day. The trade was active till the next day. So that's everything that happened on Tuesday, right? Let's go to Wednesday. So Wednesday is simple, intraday AMD. This particular setup happens almost every day, guys. For those of you that have been studying it and have been backtesting it, and at least have been trying to use it, you'll be you should find out that there are different ways of picking trades with the intraday AMD. Not only using 5 minute confirmation, there are different ways of picking trades. Now look at this. This is the 1 hour time frame, right? And we have that intraday AMD just around London session. London session trade. There was no trade on Wednesday for me in the New York, just the London session trade, right? The first candle trades into that fair value gap, respecting it. I see this body, the bodies of the candle respecting it. The second candle too respecting it. The third candle too respecting it. You see this thing, whether confirmation or not, you see this particular arrangement, like this particular alignment. Once you get your bias, whether you get confirmation or not, don't wait for angel to tell you to enter that trade. Don't wait for anybody to tell you to enter that trade. That's telling you that it's a complete sell, because price is respecting that intraday, that current day fair value gap, for 3 consecutive hours. The first candle, the second candle, and the third candle. You see the bodies of the candle is not breaking that, and this is algorithm, right? That's the precision you want to see. The next one, or even if you see this first candle, this second candle, the next one, you should find entry without confirmation or with confirmation. This is not something you can go back and start doing tomorrow. No, 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 no. Please write this particular thing on your journal. Go to the last 6 months and study it very well, backtest it very well. If at all what I say is true, don't take my word for it. Not in any uh, um, consequences should you take my word for it. Now, there was my trade on Wednesday. I picked a trade there that was about 660 warriors or something like that, because my stop loss was very wide. I placed my stop loss above this candle. I did not wanted any, anything to smell my stop loss. I like keeping my stop loss in an invalidated zone, because most time is either price comes, take your stop loss and starts going to your direction. Trust me, there is no pain greater than that. Even missed entries is not greater than that. You have a very good trade, 12 risk to reward ratio, and price end up taking your stop loss before going to your direction with large, heavy candles like this. Trust me, you will just slam your laptop or your system, whatever you are using to trade. Okay, so let's go to Thursday. All right, this was my trade on Wednesday. So my stop loss was there above that high, but I did not share this in the community. Um I like the confinement. I like keeping my things in secret very, very well. Like my trading career, my trading journey. I'm just here to teach you what I know, right? I'm just here to teach you what I know. And if you think that I don't know these things, then no problem. You can go find someone else. I'm not forcing you to be here. But with all the proofs, weeks in, weeks out, day in, day out, I've been calling this market, this particular instrument that I trade, levels and zones I wanted to respect, I wanted to reach for, and they just keep happening. Why? Because I've dedicated time, days and nights, to study this particular instrument to this level of understanding. Not that I've known it all, I'm still studying. Everybody's still learning. Okay, so this was my trade, and there was nothing to trade on the New York time, the New York session. So price just rejected back to this fair value gap, but I did not pick that trade. Looking at it, there's no confirmation, there's nothing to even trade there. This was my only trade, and that was that for Tuesday. The 6 ratio plus, I think this was not 6, this was around 9. I cannot really remember. 9 ratio and the 8 ratio. That was my trade for Tuesday and Wednesday. I don't know if you saw this like this, but as I'm showing you now, go and study how you could have possibly taken this trade. What you want to do is study and backtest till you start seeing these things earlier on live trading. This what I'm showing you here is hindsight. Okay, I saw these trades, yes, but I'm showing you through hindsight because you did not see them. I'm telling you, go and look at these things. The more you look at these things, there's a law in psychology. I cannot state it, I've forgotten it entirely, but the more you get exposed to something, the more you get familiar to that thing. Something like that. There's some kind of law that says something like that. So you start seeing this thing through hindsight every single day, every single week, every single month. It's just about a matter of time before you start getting familiar to it, that you see them even before they happen, or while they're happening, or while the candles are printing. Okay, it's possible, trust me. Just be consistent and follow the process. Now let's look at Thursday. Thursday was quite funny because um there was no trade on Thursday for me. There was no trade, although this is a previously favorable gap. But looking at this trade, you feel like, oh, it's a counter trend. Why? Because price already on Wednesday, price already take out sell side liquidity. I remember what I told you about those relative equal lows that are beneath. I'm going to talk about that on the weekly forecast, right? I said something in the community that if price does not take that sell side liquidity on Wednesday, then forget about it for the rest of the week. Price is not going to take it. That is why, because I've said it this many times, that the window for the weekly cycle, that's the manipulation phase, is Monday through to Wednesday. Monday to Wednesday, you want price to form the high of the week or the low of the week from Monday to Wednesday. That's where you're looking for. Some people think it's only Tuesday, it only happens on Tuesday. Some people think it only happens on Monday. Some people think it only happens on Wednesday. But I'm telling you, the window for that expectation is Monday to Wednesday. So once Wednesday took out that low, Thursday did something very interesting. And what I'm going to be talking about, I've not taught it yet, but you can find it on ICT market maker models. I've not taught that yet. I've not even mentioned it before, but this is a very interesting topic. You can go to ICT's playlist on his YouTube channel. It's totally for free. Go and study everything there. ICT Maker Model Series or Maker Model Market Maker Series or Market Maker Model, something like that. This is very interesting because once price takes out a sell side liquidity, it's ready for what? For distribution, but it consolidates first. That consolidation is telling you that, okay, price. Remember what I said in insight on liquidities. These are all the puzzles you need to put it together. Insight on liquidity, what did I say? Once price takes out a buy side liquidity or a sell side liquidity and consolidates, that's telling that price is ready to reverse. But if it's taking it out with momentum, that's telling that price is what? Ready to seek for the next liquidity. Now, looking at the lower time frame and looking at this sell side liquidity, what do you understand by what I just quote? If at all you wrote it down. Price takes out this sell-side liquidity, and on Thursday it begins this consolidation. Although if there was an intraday AMD trade, intraday AMD setup for me to take on Thursday, I would have trading it to this fair value gap. You just want, see, when most people know how to take a trade, they don't know how to exit. Trust me, you know how to take a trade, you don't know how to exit. If I'm taking a trade, I'm looking at every possible levels for rejection as my take profit, every possible rejections. First, I'll look at this high, right? Next, I'll look at the next fair value gap or the next high. Now, I want, as price is approaching that high, this is why I like trading with market order. I don't use limit order because you just place order, set your stop loss, set your take profit, and forget about that trade. I don't do that. If I place my order, I set my stop loss. I am trading that trade till where it's likely to reject from, right? So I checked this, looking at if I had an entry here, I would have checked this high. Is price likely to reject from this high? Is it showing any rejection? If yes, then this will be my closing. If no, then I'll look at the nearest position as my exit, because this is a very, very big challenge for most traders. They know how to pick a trade, but they don't know where to take profit. They don't know when price is turning on you. When price is turning against you, sorry, you don't know when price is turning against you. Therefore, you be in profit and slide back into loss. It's a very common thing in your trading journey. With time, you learn. So there was no trade for me to trade. There was nothing for me to trade on Thursday. Price went for this previous day fair value gap. Respecting that, I would have countered this trade, but there's no don't counter trade in the distribution phase. That's the law. That's the rule, and I don't go against it. Besides, aside from that, this price reached there exactly 6 p.m. Sorry, exactly 4 p.m. That's New York time, when price closes for the day, rests for 1 hour, then opens again at 6 p.m. So exactly 4 p.m. Sorry, exactly 3 p.m. New York time, my trading hour is closed. I'm done for that day. I'm no more looking for setup. So whatever happens for the rest of the day is not my business. I don't have anything to do with Asian session. And that was Thursday for you. Now looking at Friday, okay, look at the consolidation that happened after price took out that sell side liquidity. You have this consolidation ready for the distribution. Price did not complete the distribution phase. And remember what I say about every new week. Whatever, when you enter a new week, you want to check out what price was doing on the previous week. What price was doing is what price is going to continue doing, despite the market closing and the market opening. So price was distributed on Thursday and Friday, but stopped somewhere. Monday will just continue what price was doing. I'll talk about that on the forecast. So looking at Friday, we had previous day fair value gap here, and look at how the candles, everything is respecting that fair value gap. You can go and draw it on your chart. If you don't like my chart, you can go and draw it on your chart and see it for yourself. And don't take my word for it. Look at the respect these candles is giving to this fair value gap. These things are algorithm. I see this first candle dropping here, the second one, the bodies, the third one, the body. This last one again, the body, you can see it. That's telling that price is ready to reject. And what did I just talk about a moment ago? When taking a trade, okay, first let's look at the 1 minute reaction. I think this was the 1 minute reaction. Price trades into a fair value gap. You're looking for what? For a confirmation. For those of you that are already familiar with it, you can set your limit order. Like I see some people do that. They just set their limit order on the previous day fair value gap. Some people don't want to see anything like confirmation. They want to pick trade at the very bottom. And I use both, but I'm not going to teach you about the other one because the other one I posted this particular trade on the Telegram channel on Friday. People were confused because I picked the trade even before confirmation. Yeah, that is experience. I have been trading this particular thing for months now, so I know how price will respect a fair value gap, and I know when to pick this trade. But for you, till you reach that level, please follow the confirmation. At some point, if you inspire to know more, you can study and find out how to pick these trades right from the very beginning. Because looking at this trade, after this sweep, many people pick their trade from this bottom after this sweep. And that was where I picked my trade, but not because of that sweep. All right. I'm not going to say it now. I'll just leave you to study that one for yourself. Go and study that one for yourself. Any previous day fair value gap, any intraday fair value gap. See if there's any possible way you could pick those trades without the normal confirmation I've taught you. But most times I pick double entries using the first confirmation. That one is personal, is my own private confirmation. I've not talked about that one, not even ICT. I've talked about that one. It's not in any YouTube video, it's not in any Twitter thread. That one is known to me and me alone. That is my pseudo strategy. Okay, in coding there's something they call pseudo code. So I have my own pseudo strategy where it belongs to only me. That's my own personal signature. Okay. So you can go and study your own and find out how you could possibly pick these trades from the bottom. There are many traders I know who don't like anything like confirmation. But I use two types of confirmation. I see the first one, that's my trade. The second one coming is my second trade. So in all of this previous day fair value gap, like what I did on Monday and Tuesday. I'm sorry, Tuesday and Wednesday. You can see that. So in all of this previous favor league gap, intraday AMD and all of that, I most likely pick two trades alongside with them, but not every time because if I get a very good risk to reward ratio on the first trade, there's no point of me risking the next trade because it could go on me, it could turn against me at any given time. I don't control this market. Sometimes you respect me using the first confirmation, but I still lost that trade. It's inevitable, right? So I picked my trade right from this bottom. After price respected that fair value gap, I picked my trade. Then waiting for a break, price broke this high or this high or this high. Anyone you want to look for, anyone you feel that price broke or is your break of structure or MSS or anything, whatever it is for you, okay? But price broke a high for me, and I'm looking at the draw liquidity on the discount, and you can see before just few minutes before price closed, price reached for that fair value gap, still respecting it. Now I don't know what Sunday is going to do. If Sunday is going to, some people took this sell, yeah, I don't know if Sunday is going to keep selling till this low, but for what I know, you know what this is, price trading into discount FVG, and Sunday just buys. I'm going to talk about that on the forecast, right? So this is what happened throughout the week, and this is going to be your particular homework or your assignment. Find a pseudo strategy or a pseudo confirmation, not in any video, not in any Twitter thread, none that you've not seen from anywhere. Everybody always have a pseudo strategy, one that belongs to you, your personal signature. You know, that's why you need to study. Not everything you get the ideas from people, or not everything you want to learn from videos or from threads or from PDFs and everything. You must study. They study to find out those things. I study to find out these things. So you can study to find them out also. You just need to add a little bit more of work. All right. Okay, so that's everything for the weekly market review for this week, June 24. Now we'll be heading to our weekly forecast, and let's see if everything we talked about last week happened this week, or if it's yet to happen already, or if it did not happen at all. All right, see you then. As our custom is, we always start with dollar. You want to be checking what dollar is doing, and I'm not interested in the higher highs and higher lows and all of those things you guys do. I'm only looking at our nearest form of reaction. Where is price likely to what's price likely to do in this week, this coming week, or upper weeks, right? So this was the levels outlined. Like I said, I'm not going to clean any of them. This was the levels outlined last week, and you can see how price is respecting that level, but it's nothing on the weekly time frame. Only if you go down to the daily time frame, then you know what that is. That is a fair value gap. I was looking for price to what to respect, and you can see this. It's very very visible on the weekly time frame. You can see sorry, this is buy side imbalance, sell side inefficiency, BC. What am I expecting next? I'm expecting price to take out this high on dollar, and I'm not so very sure. I'm not even 80% sure, because price could just start rejecting downwards. But looking at the bias on NASDAQ, GBP USD, Euro USD, it seems like those pairs, all those instruments are ready for a leg down. The way it seems now, it seems like all those instruments are ready for a leg down, and I'll only be expecting dollars to head up if its quote pairs are ready for a leg down. Why do I say I want dollar to head up? Okay, first we have a buy side liquidity here. We have this volume imbalance. You can see that. Also draw liquidity. Remember, for the past few months and weeks, we've been talking about these levels, and price just keep respecting these levels. You can see the algorithm following these things, right? So we have price respecting this fair value gap, even though it has been tapped into that week, have been tapped into. You can see price is still respecting it, and I've gotten this question before, and I hope this answers your question. Yes, price can still tap into a fair value gap that have been tapped into. Very possible. That's why we have inverse fair value gaps at the first place. Okay, we have on the weekly time frame, price is respecting that fair value gap. On the daily time frame, we traded below just quite a bit before heading higher. Now, I would like to see price come for this high. In fact, I'm going to set a alert there. I like to see price come for this high, and if price is coming for this high, then oh dear, it's a very big sell for Euro USD, GBP USD, NASDAQ, and so forth and so on, whatever the case may be. Let's look at Euro USD first. All right, so this was the annotations last week on um Euro USD. This is not visible on the weekly time frame, but the daily time frame there is a fair value or a volume imbalance there, yes, and you can see price dropping into that, respecting it the first week, second week, and the third week. We're buying into this fair value gap, and you can see how price is still respecting it. What did I say about these things? Please write these things down. Once you see price respecting a fair value gaps like a fair value gap like this, sorry, this is telling you that price wants to reject from that level. You can see this volume imbalance. You can see this week trading into that, rejected. This other one too on the daily time frame, trading into that, rejected. So you see levels like this, it's telling that price wants to reject from that level. And the next week, we could be selling into this fair value gap. Yes, I want to see price. At least 90% sure on this one that I want price to be trading into this fair value gap. Don't take my words for it. I might be very wrong, and I'm okay to accept if I'm wrong. Okay, let's look at the daily time frame. How many days? How many days? You can count it. 1, 2, 3, 4, 5, 6 straight days. Price just keep respecting one particular level. That's the consolidation. The price is respecting, reacting to that level, not a support, not a resistance, but that fair value gap. That's telling you that price wants to reject from that level, and it's still doing this the same thing on this level. This level is no level on the daily time frame, but it's a level on the weekly time frame. So you need to expect the weekly time frame to adhere to that level, to respect that level, and it is respecting that level. So I would like this week to be trading, to be selling into this fair value gap on Euro USD. So if you already have your buyers drawn out for Euro USD to be a buy or consolidation or range or whatever, you might want to consider this, because I'm expecting Euro USD to sell into that fair value gap Now, does it just stop there? I have a sell side like liquidity here. You know, we've been talking about the sell side liquidity for 3 weeks now, and I want price to reach for that sell side liquidity, but might not be now, might not even be this year. I don't know. I can tell a level where price will react to, but I cannot tell when price will likely react to that level. Understand that I'm not a prophet, okay? But I want price to react to this level. This is where I'm expecting my eyes to see. So if you see any possible sell setup on Euro USD, trade Euro USD into that fair value gap. It might likely cover all of it, but that fair value gap is visible on the weekly time frame. So go and study these things. Only use what I'm telling you here to go and study. If you're having analysis paralysis or you don't know exactly what to find out in the market, this is not a signal. But if you have a sell setup on Euro USD, you can possibly swing it to this weekly fair value gap. Price is refilling that this week or next week or upper week. I don't know, but I want to see price trading to that fair value gap. Okay, so let's look at GBP USD on the weekly time frame first. And this is awesome because we wanted price to trade into that fair value gap, but this week is just bearish. This week is bearish for all dollar quote pairs, but bullish for dollars. That's the inverse. That's the inverse correlations I've been talking about for months now. Okay, so I still want price to trade into that fair value gap. I still want price to trade into that fair value gap perfectly. If it's respecting that fair value gap, then that's going to be a point of rejection for me. And I still have a drawn liquidity on the bottom side here. Remember, if dollar is ready for a leg up, then so is all its good pairs ready for a leg down. So if dollar is ready to buy, you'll be looking forward to sell GBP USD. But from one level, should you just go in there and start selling from that level? No. You want price to trade into a drawn liquidity that will take you to the next drawn liquidity. So drawn liquidity to drawn liquidity. All these levels are magnets to price. Wherever price is, you just want to figure out where price is coming from and where price is going to. So you know how to position yourself to pick a trade. Picking a trade is, I don't know, many times ICT says picking a trade is the easy part, but I think to me picking a trade is the hardest part. Yeah, to me picking a trade is the hardest because knowing all these levels where price will react to is very simple. Very, very simple. Just understand bias, understand draw liquidity, understand market profiles, understand market maker series, all of these things. Go and study them from ICT playlist. Of course, I've not talked about them yet, but I don't know if I will, but I can't promise, but I will. Okay. Understand these levels, understand those all those things I mentioned, then you know which level price is ready to run into. I'm not saying ICT strategy or ICT concept is the best. Nah, no. But this is what I've been working for me. Okay, this is what I've been working for me. This particular level is like is very, very good at knowing where price is running into. ICT teachings, all of it, A to Z, is very, very, very good in knowing where price is likely to run into. Because if you figure out where price is coming from, which drawn liquidity is price coming from, then it's easy to know which drawn liquidity price is going to. The entering the trade part is to me is the hardest part because there you could possibly put your stop loss in a very wrong area, or price could take your stop loss and continue in your direction, or many scenarios. So understand this one first, then you can spend months or days or even years or weeks trying to find out how to pick a trade to those levels. You just want to position yourself in a very, very good area. That's why we have the daily AMD, where price uses the intraday AMD or the previous day fair value gap or the previous day high or the previous day low. Find the next drawn liquidity. So that's that for GBP USD. Now let's look at NASDAQ. All right. So if you are still buying on NASDAQ, then that is my first draw liquidity. If price should respect that fair value gap, fine, we'll see rejection. If price doesn't, that high, all of these high, all of these things there is our next drawn liquidity. Remember what I said earlier when I was doing the market review, that for exit is the hardest part for traders because they enter trades that will give them profit. After some time, they just end up losing that trade because you don't know where to exit. So if I was to be a swing trader and I'm picking a buy, I'm looking at all of this possible drawn liquidity. Is price giving me a rejection reaction on a drawn liquidity. If not, I'm still holding that trade. If it's going to give me a rejection reaction, fine. I'm no more holding that trade. That's my exit. I don't have a determined profit. That's how I trade. I don't know. It took me a very long time to be able to trade like this. I don't know how you trade. You can have a profit, then when price get there, fine, you take your profit. But I'm looking at every possible level that price could react to. I can have a target that is way more far ahead, like a high or a low, but I still have a favorable gap here, and price reacts to that favorable gap, and start rejecting. That's telling you that price will react from that favorable gap. Is best you close those trades, whatever trade they are holding. But some people, because your profit is high, or that trade is going to give you 20 rupees reward, you will not close that trade and price turn against you. That's not correct. I don't do that. So I'm looking at the first draw liquidity before the next. That high, I want price to take it out, but I'm looking at this favorable gap first. And remember, we still have this favorable gap on the weekly time frame. I don't know how long it will take price to reach into that favorable gap, but look at the daily time frame and see something very interesting. We have what? We have a weak zone liquidity. We have a weak zone liquidity here on the daily time frame. Very important. Once you see things like this, what do I see once you see things like this? Expect a trade downwards to the next drawn liquidity. Although we have a fair value gap here, but if price is not respecting that fair value gap, then I'll look at the next. Okay, that's why we ended as a bearish week, because we already have that drawn liquidity. So next week on NASDAQ could also be bearish, but we might still have a complete weekly cycle. Why? Because we have relative equal highs here. You can see that relative equal highs on the hourly time frame. So if price should continue, remember what Friday was doing. Remember when I talked about Friday on market review, it already gave a confirmation to trade higher. So if Sunday should continue what price is doing, then Monday pick from there and take out this high, then it is possible that we might likely sell to this other low that we failed to reach for on the previous week. We have first drop, second drop, okay, third drop. All of this is telling you that this low is a magnet for price to trade into. Price is going to take out this low. I don't know when, but what I'm expecting for this week, my expectations might be wrong, so don't take my word for it. You can still have your own bias. What I'm expecting for this week is for Sunday open to continue what Friday is doing. I know many people are on sell trade right now, so don't take my word for it, because you might likely be profitable. But I don't know, it's your trade. You know what you saw. If Sunday opens taking out this Sunday and Monday opening takes out this high, then we might likely see some rejection to this low, or either we might continue buying, because we have a weak zone liquidity here, which is telling me that price is going to be bearish till it takes out a higher time frame draw liquidity. This low on Thursday is not a higher time frame draw liquidity, because it's not even visible on the daily time frame. But on the daily time frame, these equal lows are visible. You can see that. So after the weak zone liquidity, I want price to take out this low, drop it into this fair value gap. Then from there, we can decide what the next scenario might be. If price wants to start buying from there, no problem. But if price doesn't respect that fair value gap, then I'll be looking at this. So as you are heading into the next week, you can be looking at the same view of what I'm looking at. Picking the trades is going to be on you entirely, because I don't give signals. I'm telling you the levels I want to be paying attention to on Nasdaq this week, but picking the trades to those levels or from those levels is totally on you. I've taught you how to pick these trades. Just use what you've learned and try and study hard this week. All right. So thank you for joining our market review. And if you find this video insightful, please like and subscribe to really motivate me to keep doing more. That's if it's insightful. Okay, if it's not insightful, then I don't know, still subscribe. It's a very good way to support. All right, until next time, be safe.